Hi, guys. Welcome to the 36th episode of the weekly trading wrap up, where we talk about the week in markets from a trader's perspective, what to focus on, and what to ignore. So let's begin. Okay. As usual, we start with the picture of the S&P 500, and this arrow here denotes Monday, Tuesday, Wednesday, Thursday, Friday. Another melt-up week, same as the week before, same as the week before that, and same as the week before that. So for a whole month plus, we've been melting up, broke through the all-time highs of 613 on the SPY, and no retrace, nothing. So let's talk about the technical picture, as we always do. That's the first thing we always talk about, and obviously it's bullish. It's been bullish since that April drop here, and barely a hiccup, not even a 3% pullback for months. Okay, so as you know, the technical picture, we don't even have to look at the moving averages. We have the cross here for the 50 is the red, the blue is the 200, sloping upwards, everything above every moving average. Okay, so this is a massively strong bull market, and you should be net bullish. Okay. However, as you know, my first scenario going into the summertime, and we're already like halfway through the summer. So my first scenario was initially proposed at these levels. Okay, we would be probably chopping sideways for the whole summer, and that's not to be. And we went into, which is very surprising to me. However, we did go into our second scenario of a market slow grind move higher in the market over the summer. So we're morphing into the second scenario, a slow grind up. And as you know, I entered some short positions here to cover, not net short, but to cover some of my long exposure. And they've been doing badly, but it's okay. My long exposure is overpowering that short, slight short position that I have. So going forward, we know that this is a bull market, and that we should stay net long bullish. And this week, very light week. Very light, slow grind up, as we said. VIX volatility is crushed, continues to be low, 15 handle. It could stay this way for a long time, as we can see. Here in 2020, the beginning of 2025 was very low, small spikes, but here not even spikes, not even any small spike, all down. Okay, so I entered some positions here to UVIXY on the UVXY, which is a ultra short VIX short-term futures contract. I bought some puts, 17 puts. It's the exact opposite of the VIX, and it's a leveraged product of the VIX, the volatility index. And I suspect soon, I bought the calls out all the way into September expiry. So I expect sometime within now and September, we're going to get some kind of spike, maybe to 20 or something, who knows. But so far, we can't deny that this market is very bullish, and we should respect that, and we should stay bullish. Okay, so we're morphing into the second scenario, which is like a slow grind up throughout the whole summer. So the macro this week, very light. All we had was the initial jobless claims on Thursday, and they came out at 217,000 compared to 221 of last week. Back crushed down. So this is a good sign. This means that there's no recession. People are not filing claims. So as the macro is still bullish, the technicals are bullish, the fundamentals are bullish, you should stay bullish. Net bullish. Although I still have some short exposure, and there's ways to add short exposure that will, not cost you anything. In fact, you can do it for credits if you do the right strategy. However, the point I'm trying to say is that you still should have some short exposure. This is getting this low vol move higher is very vulnerable to a some kind of rug pull. I mean, any small catalyst that you have here is will take the markets down because people are very, very long. So let's look at the second part of our analysis is sentiment. We look at the fear and greed index. It's at greed, not really extreme greed. I don't know how it went down as the market's melting up, but everything else is at extreme greed almost. The put call options are greedy. Then people start buying some puts. Okay, maybe from extreme greed it went to greed. Okay, so we're still not at maximum extreme greed, so this could still go higher. And the other thing that we look at is the AAII Investor Sentiment Survey, and that came in a little bit more bullish, although less than last week. I mean, which is not good, but it came less bearish, although it's still higher than the norm. The normal reading for bearish is 31%, the normal reading for bull is 37%, so we're basically at normal readings right now on the sentiment. So people are not believing this bullish move, which, I mean, we're not at extremes yet. They're believing it, but we're not at extremes, especially in the fear and greed index. We can still go higher. So this solidifies the case for the continuing bull market. Any pullback, like I'm hoping, this market goes back down and retests the highs, but so far no retest. And the sentiment is pretty much neutral or slightly bullish in terms of the sentiment indicators that we look at. So that's it. Macro bullish, technicals bullish, fundamentals bullish, you should be net bullish, okay? Although, like I said, a little bit of short exposure won't hurt because you never know what's going to happen, okay? So let's look at the general stuff that has interested me this week, and let's recap our metals position, okay? First, we go into our gold. Gold this week started off very strong. For the Monday and Tuesday, it was ripped. Hit this 3435 level, and then went down Wednesday, Thursday, and Friday to finish basically slightly down for the week, okay? Or flat to slightly down, which is pretty good because, I mean, with heavy bullish sentiment and a risk-on attitude, you expect this risk-off asset to get destroyed. It has. I mean, it could continue to go down, but in my view, as long as it stays above this 3,000 level, which is down here, as long as it stays above 3,000, people are going to start pulling people. Institutions and smart money and generalist investors are going to go into this space, okay, which we do see because, like if you look at GDX, which are the miners are still staying high as gold is sort of selling off, which means that the miners are outperforming the metal, which tells you that money is coming into the space. It takes time. It doesn't happen overnight. It takes months, okay? People have to change their mentality because there's been years of doldrums, okay? Years of GDX down. It's only recently that we've seen it come up in 2025, okay? So it's just the beginning, maybe inning number 2 or 3 out of this ball game. But this portends well for the gold space, okay? So that's gold. The next thing that we look at is silver, and silver doing much better. After the breakout, it did well this week, except on Friday it took a hit, okay? But that's good because it sort of alleviated the conditions that were overbought on the RSI and the MACD. So it's back down to levels where it has more fuel to continue to go up. As long as this uptrend hasn't been violated, we're only at $38. I mean, we can go to the all-time highs of 50. Now let's go to a monthly chart of silver. As you know, this spike was the 1980 spike, the Hunt brothers, and the other one was the 2011 that went up to $50. So we're not even at the all-time highs on silver, and yet we have surpassed the all-time highs by over 50% on gold. So if people start coming back into the silver space, it's going to be explosive in terms of a catch-up move. We could even go above 50. Okay? When it does hit 50, if it does hit 50, I expect to get rid of at least half my silver position. Okay? I got rid of a bit on this move. If we go back to the daily chart, around here, when the SLV, not silver, but the silver trust was around $35 on this spike, I sold like about 10%. Okay, so we're back down at that level, about 34.68 at the close on Friday. Okay, so that is the silver market. Still love it, still an uptrend, you hold it. Okay, and the last thing that we look at is copper. Copper futures. Very surprised that after this flag, it kept going higher. That's very, very strong. So we have all the metals super strong. Maybe gold coming down from highs, okay, but still at high levels. But all of the other metals that we have, silver and copper, at near highs. Okay, copper at 580, 579 is huge. Okay, so I expect copper companies are doing well, and silver companies are doing well. Okay, so of course the big theme this summer and this past couple of weeks is that this market is super strong, and complacency has starting to set in. Even though sentiment is not there yet, we still see crazy stuff that we generally see in bull markets, and that is you see a lot of like meme stocks, okay, ripping. You see a lot of the crap going up. The crap rises in the end. It's an old Wall Street adage. So you see a lot of crappy companies, a lot of Wall Street bet retail apes. Let's call them apes. That's what they love to be called. A lot of these apes are coming into these meme stocks, especially the ones that are the most shorted. Like, of course, what we saw was Open Door, technologies, because, it's basically a real estate listing site, and it went from like 50 cents to almost $5. Okay, and it's hovering within that half. Okay, I don't know where it's going to go. You have other ones like Kohl's, just a retailer, crappy retailer, very short, heavily shorted stock. So they want to, basically, when you see these kinds of patterns, in a downtrend, this is like retail coming in to try to pump it up and try to do another GameStop, where they think that the most shorted stocks now will act like GameStop and it'll go up to $300. It's not. It won't go to $300. You have other stocks like this, like Pineapple Financial, which is another like, mortgage broker type thing. Look, you have from $1.70 to like $9 on this Wednesday spike. On Wednesday, they decided to spike at the same time, and it's a Wall Street bet coordinated ape move. These companies don't make money. Pineapple losing terrible. It's like high debt, and they're losing a lot. I guess it's a sympathy play because they're in the housing business, I would say, mortgage business, just like Open Door. They all show the same pattern, okay? They all show a move that's crazy. And, don't play this, okay? This is what suckers play, okay? You shouldn't play this. This is a terrible move, okay? You're not going to get another GameStop. It's going to be impossible going forward. You're not going to have these more shorted stocks like GameStop going up and then hedge funds blowing up at it. You're not going to catch lightning in a bottle twice. It was a one-time fluke. Please don't trade that way, okay? But when you have this kind of action on Kohl's, Open Door, look, on Kohl's, Open Door, this is Kohl's. It's euphoric type, action, which should not be followed. Okay, don't do that. I could be eating my words in a couple more days, and this thing rips even higher. It's possible, but this is not smart. Okay, you will lose more often than you gain. Okay, especially when the call interest is super huge here. So don't bet. If you want to play it, if you must play it, go very small. Just bet 1% of your portfolio on this, and then don't care. Treat it like a casino. You go to Vegas, you expect to lose. It's the cost of having fun, but don't go nuts on it, okay? Just treat it like the lottery ticket that it is, okay? So that's what the kind of action that you have when SPY is a low vol rise, like a stairway to heaven, into a new bull market. You're going to have these kind of crazy types of meme stock, more shorted stock type plays ripping, okay? Don't fall for it. Don't go for it. Just stick to your normal plan as a trader, do your fundamental analysis, buy stocks that have a technically good setup, who are fundamentally strong, and then ride them for as long as you can. That's what you do in a bull market, okay? You shouldn't be trading back and forth, okay? So that's it for now. Let's see next week. Are we going to continue this melt up? Absent the catalyst, we have the Fed meeting next week. Absent the catalyst, people just slowly buy it. Slowly buy this market. FOMO, they don't want to miss it. Anyways, don't fall for it. Stay long until the trend changes, but be wary that you're going to have ups and downs. Okay. Okay, this is very rare action that it keeps going up forever with no pullback. Okay, so looking forward to next week, and talk to you guys later.